Greetings guys, and welcome to my YouTube channel, nenomaila Traders. You already know. So before we get into the video, can you please like and subscribe and hit the notification bell for me? So on this video I'm going to show you, actually I'm going to do a market breakdown on Volatility 25 synthetic indice.
Make me hustle every day, we chasing people.
Show you, actually I'm going to do a market breakdown on Volatility 25 synthetic indice. So I normally start on a daily or on a weekly, but then preferably I prefer a weekly, so I can see what's the market overall, what's the market conditions. So but then on this side, on trading view implementation, I can't get it doesn't give me the option for weekly. So let's start on a daily. So on a daily we can see overall the market was in an uptrend. It was a higher high, higher low, higher high, higher low, higher high, higher low. Actually it fell to complete this trend. It fell to come to this level and break upwards and give us another higher high. So we'll see when you get to the smaller time frame how is the market behaving. So let us do this. Let us go to the 4-hour chart, but then before we go there, let us mark out our most important levels. So let me just delete everything over here. Let me just delete everything over here. Let me delete everything over here. So let me mark this is my previous resistance tending to support. So yeah, that's my low, this is my high. Actually we can even use this low over here. We can use this low over here and this high over here, or we might as well use this one, but then let's keep it here and let's add another one here. Let's add another one here. So we have this market conditions over here. So let's go to the 4-hour chart. So on our 4-hour we can see we have hence I was telling you we have this let's focus on the previous lower the two previous lower highs and lower low. So I mean higher highs and higher lows. So this was our higher high, higher low, higher high, higher low, then it fell to break that high. So let us see what's happening. Let's mark them out. Let's draw our trend line catering for those two higher lows. So overall you can see this is our higher low, then our second one, then this was supposed to be our third one, but then it broke our third one, then it came to this level, to this support over here. It failed to break it, and we also have a break of structure, so it might have been an order block, or you know how the banks like giving us double tops and double bottoms. So you can see that the banks were here manipulating this to manipulate this trend line over here. So overall you can see that we have a break of structure over here, we have a break of structure over here, we have a break of structure over here. I don't really trade smart money concept and ICT, but then I know the concept just a little bit of it. So I know that this is a break of structure and this is our order block. So the market came back to fetch orders here on this order block, then it's gonna go up, back up here to this level. So that's how the strategy actually works. So for now, with me, as long as it didn't break my previous low, we're still in that uptrend. So this is our first touch over here, our first touch, and our second touch, and our third touch was supposed to be here, but then it came to this level to fetch what orders. So for now we're focusing on what on buying it than selling it. So we're buying from which level? From this level until here. My entry would have been here after the bullish engulfing. After the bullish engulfing, I would have entered until that level. So we go to the smaller time frames. We go to the smaller time frame to the 1 hour. So overall we can see that we had this bullish engulfing, and let's say we wanted an entry. We go to the an hour chart. So on our hour chart, we have this. We have this. We would have entered after this break of this bullish continuation pattern. So I don't know how to draw it, but then, you know, they are never perfect, but then when you see it, you see it. When your eyes are used to them, you see them. So I would have entered after it broke, but then preferably I would have entered on the 4 hour, on the 4 hour bullish, after the 4 hour bullish engulfing close. Let me go back to the 4 hour. So on our 4 hour, you can see the level that I would have anticipated the market to go back to. It's if the market broke this level, then came back to test it here. So let us go back to our, let's say I entered here. So let us go to our 1 hour. So on my 1 hour, this is where my 4 hour close, this candlestick over here. I would have entered here, over here, then the market would have went up, then came back to retest this trend line over here, came down to retest this trend line over here. As you can see, this is our second touch. Let me just remove those things. Remember, we in an uptrend. So this is our first touch, our second touch. The reason for the trend to be broken is that the banks were in the market. The banks wanted to hit the stop losses of who? The buyers. People who bought here, thinking the market is gonna go up because of the third touch, lost their money because it broke. And those who sold after the retest, because there are those who saw this as a breakout and retest, they bought here, they bought after the retest. Then the market came, they thought the market is gonna go down, but then instead the market came and they thought maybe it's coming to retest again, but then you can see overall it's going up. So for now I'm looking for more buying opportunities than selling opportunities on volatility 25 for this week. Actually, I'm focusing on buying it than selling it. So let me do this. Let me show you what I'm anticipating for now. So for now I'm anticipating the market to touch this level, and give us something, maybe a bullish continuation pattern, or bullish what you call a bullish engulfing candlestick pattern, or a bullish structure, or I don't know. But if ever the market closes with this candlestick like this, then I want to see a bullish candlestick closing over this level, this line over here. then that's my entry. I'm entering right after the close. After the close, let me just do this. I'm entering here. To which level? To my TP1 over here. Here's my TP. Let me just use this one as my TP1 and my TP2 here. So TP1 over here, TP2 over here, overall we're coming here. So yeah, that's how I see the market overall on volatility 25 synthetic indice. So for now, rather focus on more buying opportunities than selling opportunities, because overall I see more of buyers than sellers in the market for this week, or for today and tomorrow, and for actually this week that we are on, like rather focus on buying it than selling it. So let me just give you a bonus. Let me analyze something else. uh, let me try another volatility pair. Let us try volatility. What else do I love on volatility? Volatility 50. I don't like the other volatilities because then uh, I haven't had luck with them, but then let us try. The only volatility I trade is volatility 25. So let us go here on volatility 50. We start the same way on the daily time frame. So on a daily, we can see that overall the market had this double top over here. Let me just say something like a double top. You know, the double tops are not the same. There's the other one with the short leg, the other one with the long leg. There's this type of a double top, and there's this type of a double top, uh, which is this one. Then there's this one. Then there's a normal one that we know. Uh, so there's this three types of double tops here in the forex market. So let me just delete all this and get it to the chart. So I would like to also thank you for coming back to the channel. We actually growing. We actually on 100 actually yeah, it's 100 subscribers. So thank you YouTube for uh, subscribing and coming back to view all these concepts that I put in for you guys to watch and learn. I actually thank you and may God bless you. So yeah, let's go back into the video. So back into the chart. Okay, uh we have this. We have our double top over here. We have this downtrend. So what I like to do, I like to trade a trend inside a trend. So overall we had this high again this downtrend, lower low, lower high, lower low, lower high. So overall we had this level of resistance, but then it broke above, then it came, then it came, broke it as a support, then and it went back to retest it. So overall we're anticipating the market to come to which level? To this level over here. So we go to our for our so on our 4 hour, we want to see, we anticipating the market to buy, to actually sell, sorry, to actually sell. So we have, let us mark out our level of high resistance and high support. So overall this is our strong support over here, because it was once a strong resistance. So we can see that we have that level. So overall you can see that we were in this uptrend over here. We were in this uptrend, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then the market, the minute the market do something like this, it breaks a trend. It actually broke this trend and went inside, meaning the market is now tired of going up. That's why it gave us what? It gave us this double top over here. It gave us this double top over here. So you can also call it a triple top, but I see a double top over there. So what do we do here? We're anticipating a buy. So for now, let us focus on the three most, actually the two previous higher lows. The three, I mean the two previous lows. So let us delete everything over here. Uh, let us delete all this. Uh, what's wrong with this thing? Okay, so we have this trend line over here. We have this trend line. If we're not focusing on this trend over small trend over here, we're focusing on this big trend, the higher high, higher low, higher high, higher low, higher high, higher low. So we want to see the market breaking this trend, but then overall we're taking the message from the market. So that's what we do. We're taking the message from the market. So we also have this over here. I see a level of interest. uh, so we still on our 4 hours. So overall we have this double top on. Let me just show you on our 1 hour time frame. We have this double top over here. You can also call it a triple top, as I said. It's also a triple top, a triple top, a triple top. I see a triple top. Then at the break of it, you would have entered here, somewhere here. After this bullish engulfing, bearish engulfing, after this bearish engulfing, you would have entered. You would have entered right here. Entered. Then where are you taking your take profit? Over here, on top of this trend line, because you're not sure if the market is going to break. You just want to take the message from the market. You can put your stop loss over there. Then overall the trade was 1:1,6. You actually risking $1 to make $1.6. Okay, I hope you understand the risk ratios. uh, let's say you're risking $1. Let me just show you over here the overall outcome. Let's say over here you would have put your stop loss over here just beneath the previous bearish candlestick, and you were aiming for where? For this level. Overall you targeting what is this, $5.7. You're risking $1. Let me see, it's 1 is to 5.17. You're risking $1. Let's say you're risking $10 to make $50, 17 cents. So it's something like that. You actually risking 1 to make 5. So yeah, I hope you really understand uh, the risk ratios. So a good risk ratio, it's 1 is to 2 upwards, not 1 is to 1, not even 1 is to 1. For the first TP, you can use 1 is to 1 for the first TP. Then move your stop loss to break even. Then let it move with your money being protected by your SL, your stop loss. So overall, what I like to do on volatility is that I like knowing the direction of the market. It's very important. Then I go to the 15 minutes. I like scalping volatility. All the pairs on deriv, I actually love scalping them. I don't trade them from the, I overall trade them on the bigger time frame, but then I go inside the candlesticks, inside the smaller time frame to actually get a sniper entry for the market not to retest too much. So overall, after this break over here, I would have entered here, then put my stop loss over this candle over here. So you can see overall I'm risking less and aiming for more. So I'm risking 1:3. So you see it's even better this way. You protecting uh, your money, you aiming for more profits. So it's better this way. You overall you need to know the bigger picture in order to get into the small time frame. You start on a bigger time frame, then you go to the smaller time frame. So yeah, there you have it, guys. nenomaila M traders, you already know. I hope you find value in this video and you come back for more. There's more coming. There's more about synthetic indices coming, guys, and there's more about risk ratio and money management videos coming. So be on a lookout. Do not forget to subscribe and do not forget to hit the notification bell and also like this video, and if possible you might as well follow us on Instagram and and also on you can also enter our Telegram group. The links are below. On Instagram it's at nenomaila and also at mtraders_fx. So thank you for showing up here every week, every 3 days, every day, every we actually growing from that consistency that you bring into this channel. nenomaila M traders, you already know. I thank you. God bless you all. You already know. Peace, and we out.
We chasing people. At the bad line you move. When we hustle.